Jerome Powell lowered interest rates. The feds came out and they said, hey, we're gonna lower interest rates. They've been high for a long time, and it was a 1/4 point reduction. The goal is to get interest rates lower and lower through 2025 and into 2026. Now, what does that mean for retirees? Younger people might be really excited about low interest rates because it means mortgage rates will come down. Well, most seniors, most retirees aren't nervous about mortgage rates. They're looking at what we call a risk-free rate of return, things like CDs, money markets, and bonds. And as interest rates come down, finding a competitive risk-free rate of return also comes down. I'm sure you've all noticed that over the last 2 years, as crazy as it seems, the 6-month CD, maybe the 12-month CD, has been performing the best. It's what we would call an inverted yield curve. It's where a short-term interest rate is better than a long-term interest rate. So if you go to your local credit union or bank and you want to buy a CD, a 6-month CD or 12-month CD was paying better than a 5-year CD. And the reason for that is everyone knew at some point, they just didn't know when, but at some point the feds were going to lower interest rates, and banks didn't want to be on the hook to pay you, let's say, a 5% interest rate on your CD for 5 years when they knew the feds would be lowering rates, and that 5% rate would no longer be affordable for them to offer. So what they've been doing is having these shorter term CDs and just recycling them. 6 months, 6 months, 6 months, maybe 9 or 12. Here's the point that I need to get across. As we know interest rates will be coming down, some of the tools that we've been using for the last 6 months or 12 months or 24 months may not be as competitive or as powerful in the plan as they were at that time. And so it goes to show the importance of an updated plan on an ongoing basis. The tools we use today may not be the tools we use tomorrow. More importantly, the interest rates we build into a model today may not be the ones we're allowed to use in the future. We have to use what's current. So as we see the interest rate environment decrease, that is a sign it's time to review your plan and ensure that whether it be your bonds, your CDs, your money markets, some of these, again, risk-free rate of return tools that are very common with retirees and seniors, we need to make sure that we're positioned strong still as rates come down. If the strategy you're using for your short-term safe money is based on rates that were here 6 months ago or 12 months ago, hate to be the bearer of bad news, but in 6 months or 12 months, those rates won't exist, which means the tools we use then may not be as powerful now, and we need to adjust. If you're not sure what that looks like for you over a period of, let's say, 3 to 5 years, that's where we would encourage you, come in, sit down with a team of professionals, and let's analyze your situation. Let's find out what your future looks like if we see CDs come down to the 2% range where they used to be years ago. Let's see what it looks like if our bonds are performing at a lower rate of return. Maybe there's some municipal bonds or money markets. But these are the things we need to be able to model out to see, do we need to change course and adjust the sail? Do we need to tweak a little bit? My dad used to always say, small hinges move big doors. And sometimes being proactive and making some small tweaks can be 10 times more powerful than waiting until you're forced to make a change because you're being proactive. That's what we encourage our clients to do, and it's what we do as part of our Retire Forward process, is that ongoing maintenance to make sure that what we're doing today still makes sense. And if we made a decision yesterday, we need to see if we should evaluate that decision for tomorrow's new rates, new taxes, new healthcare, new world. Looking forward to sitting down with you guys. If you want to find out more, I encourage you, follow the link to learn more about how we help our clients, or use the phone number to call and set an appointment to sit down with our team. But let's make sure you continue your path forward.